What's going on, traders? This is Jack with the Trading Tribe. Welcome back to the channel. Today we are going to go through one of my most popular strategies that I'll deploy in the swing trading kind of arena, and I'll show kind of a real example of two different swing trades that I am currently in, kind of using this strategy right now. If you look on my platform, I am actually up. If you add both of these two open P&Ls together, about $6,000 using this strategy. So it's a strategy that's battle tested, and I'll show you kind of the scenarios where I will deploy this. And if we look here in ThinkorSwim, right, this is my live account. I've actually taken really the same sort of trade on both indexes here. So we're going to look at NASDAQ today because NASDAQ's the relatively strong index compared to the others. But we've taken the same trade on the ES side, which is the S&P 500. Both indexes as of lately have essentially been ranging. And so that's kind of step one, right? If you want to be able to trade the range, over here on the left, I'll typically zoom out to a longer term time frame, like the hourly chart. And this gives us kind of a zoomed out view of what the asset is doing. We can see here in the last couple weeks on this hourly chart, right, the indexes have really just been going sideways. So think of them as kind of ping-ponging back and forth between this, 17.9 level and this 19.3 level-ish, right? These two levels have acted as magnets, right? Every time the indexes have come down around these lows, we've had big bounces higher, and then every time we've gone up to these ceiling areas, we've had some pretty big rejections down. And I was able to play this trade last week as well to the upside. Was able to kind of ride NASDAQ and ES up and have basically just traded the range, right, from key level to key level. And I'm in the same trade now. So early this week on April 21st, we actually took out this key level briefly. So on Monday, we actually went underneath that key level, but you'll notice really quickly, right, we reclaimed it. And that's essentially when I got into the trade. So here, if we look on the 1-minute chart, we can see my average on NASDAQ is 17,921, which is right around here. So right as NASDAQ kind of came off that trend line, reclaimed that key level, that was essentially enough confirmation for me to take what I call a range trade. And how the pros will do this is typically we will wait, right, for that key level or that area based on the longer term time frames on the left to hold. So I'm not just buying it as it's dropping into the key level. I'm kind of waiting to see if this range is still intact essentially. And then I'm basically getting into the trade. I did the exact same thing on the ES side, which is the S&P 500, right? Very similar range if you look right now on the charts. And I was able to get in late day yesterday, kind of as that key level was reclaimed and as price was beginning to really turn bullish. You can see we had a huge move up into the close, which was obviously a good sign, as that was kind of what I was expecting in this area, right? Last time we had a huge move up as well, right around that key level. And so that's exactly what I wanted to see. And then you can see right immediately after I entered the trade, the trade really began to work. So within about an hour, I think I was up thousands already. And then obviously when you wake up today and you zoom out a little bit more, right, we've continued to be extremely bullish, which is exactly what we wanted to see. One small thing that I'll do on these just to protect myself is I will manage a little bit quicker. So in this case, you can see I already have a stop loss above break even, kind of around this structure on the lower term time frames. So I'm essentially making sure that I'm going to get out of this trade with a win. This is actually how I almost always do it, right? Once a trade really begins to work in my favor, I like to at least have my stop loss moved to break even. In this case, right, I'm up quite a bit, right, with these two amounting to about $6,000, right? I obviously want to make sure I'm walking away with a good payday either way. So on ES and on NQ for these swing trades, essentially I have an extremely tight stop loss just in case this 1 minute time frame turns around, right? I'll be able to get out for at least like a base hit essentially on both of these. And then in this case, right, if they do begin to continue upward, right, to that kind of target, that is an area where I'm open to selling, because obviously within a range, essentially expect this to be a ceiling. Obviously, best case scenario, right? NASDAQ's able to get above that. And then you have some options, right? You can actually hold this trade for a bigger move up. So it's kind of nice. Think of it as we have a profit target where we're open to selling it. And then if it goes past that, we can reevaluate, right? So that's really what I did last week as well, right? Once I got into that swing trade and once that approached that key level, at that point, right, at a very tight stop loss, and when it failed and double topped right at our key level and started turning around, that is where I exited the swing trade. So very, very similar concept here. Wanted to really give that recap of how we trade ranges, especially from a swing trader's perspective. You can just use both time frames, right? One higher term time frame and then one lower term time frame to get in near those key levels for a range. And then you have a really nice spot for your risk as well as your reward potential. If you have any questions, feel free to leave those down below in the comments. I'll try to make another follow-up video after this trade with kind of how I was able to manage it after it plays out. But hopefully this really helps. Feel free to like and subscribe to the channel for a lot more content like this, and we'll see you guys next time. Thanks.